Hi everyone, let's go over my medium time frame, low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin. Started with my medium time frame bearish scenario where we're looking for a zigzag to the downside in an ABC 535 structure where wave B has ended right on top of the 0.382, which is a common target for a wave B taken from the high to the low of A after a WXY sideways combo within W an expanding flat, X any corrective structure and Y a zigzag to the upside. We then expect a wave C towards the downside, and that has to be an impulsive structure where the most common target for wave C is between the 1 and the 1.236 taken from the high to the low to the high over here, which is between a 27.2k and 26.5k, and that is also in nice confluence with my support areas. The upper one here being between 26.8k and 27.4k, and the one just below between 26.2k and 26.5k. You also see the vertical lines on the chart, and those are fib times taken from the high to the low of A and then put it on the high of wave B to compare the time it took to develop wave A with the time it takes to develop wave C. And usually a wave C is a little bit more lazy and ends after the 1-to-1 fib time, meaning it's a little bit longer than wave A, with the 1-to-1 now sitting on the 19th of August. If we then zoom in to this structure over here, what we want to see is impulsive structures to the downside because of the impulsivity of a wave C. So if we then zoom in and we go to the 30-minute time frame, that what I've been looking for the past couple of days is a contracting diagonal where all of the waves are zigzag structures in a contracting leading diagonal, that is. So we have a 3-wave structure in wave 1, then we have 2, 3, 4, and then 5 over here being in my opinion, which is also very nicely above the invalidation level of 28.9k. Which means that wave 5 is shorter than wave 3, which is exactly what you want to see. Now in this scenario, the leading diagonal is then the end of a wave 1, and then we expect a 3-wave structure to the upside in a wave 2 for then continuation to the downside in a bigger wave 3. Now you can also see that we were looking for that price like target box over here between 29k and 29.1k, and we just missed out on actually hitting this area because we do have a few confluences over here, like a daily naked point of control and also a daily at that level, but I kind of misjudged, I suppose, that I didn't keep an eye on the lows over here. So price wigged the lows and started to move to the upside, but that is very nice. It was according to plan. Maybe missed out on a few dollars here regarding the target box, but very nice move to the upside after we were expecting that move to the downside. Now if we then look at the target area for a wave 2 and I adjust the fib over here, then what you can see is that we have an untouched blue resistant box over here between 29.7k and 29.8k, which is now in confluence with the golden pocket taken from the high to the low of wave 1. And the golden pocket for a wave 2 is the most common target. So in general, the common target area is between the 0.5 fib and the 786 fib over here, but like from those fibs, the golden pocket is the, I guess, most popular one, the most common one, which now is in confluence with the resistance area over here, which would be very nice as well, as I've drawn on the chart, as you can see, for then potentially the high of a wave 2 and then a move to the downside. Also, something good to know is that a wave 2 most commonly is a zigzag structure, which means a 5-wave move, but of course we'll see how it develops and I will update you accordingly. If we then go to the bullish scenario on the medium time frame, then we have to ask ourselves, is the low in, and is this the bullish market structure that we've been looking for? In this scenario, this is then the low of a wave 2 or a wave B, and this is the beginning of a bigger wave 3 to the upside, where you're then looking for a 1-2-1-2 continuation. However, the main issue for me with this scenario is making this the low, because oh boy, the past week I've been repeating that it is very difficult, and actually the past few weeks, very difficult to count this low as the low from an Elliott Wave point of view. This low would have been a great low from an Elliott Wave point of view for then an impulsive structure to the upside. But the fact we took this low once again makes it very difficult to have any Elliott Wave scenario that ends over here. So in my opinion, the probabilities are therefore lower for this particular scenario. Actually, not my opinion, from an Elliott Wave point of view. Now, however, in the bullish scenario, we are then looking for a double 1-2. So let's at least zoom in and assess the probabilities on the lower time frame. So we then have a wave 1 in green, wave 2 in green, and then inside wave 3 in green, we're looking for the blue 1, 2, 3, 4, 5 to the upside. So the blue count is a lower degree Elliott wave count compared to the green count. However, what you can also see is that the blue count over here takes more time than the green wave 1. So the blue wave 1 takes more time in price as well as or more time I suppose in time, but it's also bigger in price, which is not what you want to see in a lower degree wave 1, because preferably all of the waves are shorter. So the first wave 1 is the biggest, the first wave 2 is the biggest, and then the second wave 1 is a little bit smaller in time, second 2 is smaller in time. However, this one, as you can see, is bigger in time, in duration, but also in price, and on the lower time frames it also counts much better as a 3-wave structure instead of a 5-wave move to the upside. So that's not too great in this low time frame bullish scenario. But then you would be looking for a 1, you would be looking for a wave 2 for then continuation to the upside. So would the low over here be in for potentially a wave 2 for now continuation to the upside? Well, let's assess the micro time frame, switch to the 30-minute, and in my opinion, no, I'm not yet looking then for the end of a wave Y and therefore a wave 2 over here, and then a WXY scenario where W is a zigzag. Wave X over here can be any corrective structure, and then a WXY, meaning a zigzag, any corrective structure, and an expanding flat, where then wave B, and this being an A, B, C, hit the most common target area over here for a wave B, for then a C to the upside. Main reason I'm then still looking for X to be in and eventually a wave Y is because if we have to put this wave Y over here, we get very awkward structures in this area. So then we have a W, X, and then this wave Y is like some sort of a 3-wave structure. And you don't like to have a WXY inside a wave Y. You preferably want to have simple structures, meaning a zigzag, or for example, an expanding flat or a triangle, but it's difficult to count any of those in this area. If we put wave Y at the low over here, you could say, okay, we have a double zigzag and then a WX and a zigzag in wave Y, so a nice 3-wave simple structure at the end. But the problem of putting this blue wave X over here on this pivot is that it didn't cross the trend line over here, which is kind of like what you want to see, or almost like a minimum requirement for a double zigzag. And this trend line is taken from the high of W to the high of the first wave B and then an A, B, C. Clearly, price didn't even get close to the trend line. So therefore, I'm then looking for a more complex structure where wave X preferably is going to end around the 382 to the 0.5 area. And guess what? That's also again in confluence with the target box that we have over here. So both in the bullish and the bearish micro scenario, preferably we're looking for a little bit more upside towards that 29.7k area. But then in the bearish scenario, you want to see a 3-wave structure to the downside in a wave Y, either a zigzag or a flat, or you want to see a triangle. And because W is a zigzag over here, preferably you actually want to see an expanding flat or a triangle, because wave W and Y are not allowed to have the same structure in a sideways double combo, but in a double zigzag, of course, that is true. So you can have a zigzag in W and a zigzag in a wave Y. So we still have to keep that in mind, but at least you want to see a 3-wave structure and you don't want to see this low broken. The moment you start to get very impulsive structures to the downside, well, that is the moment you have to think about the more bearish scenario where volume is increasing and all that stuff for a proper wave 3 to the downside. Now, if we look at the CVD divergences, then over here we had that bearish CVD divergences that we were looking for. Lower high in price, higher high on the CVD where the target is this low. Well, clearly that got taken. While price was moving to the downside, actually we did see some 30-minute bullish CVD divergences over here shortly, but of course countering then the bearish one. So you had a mix of both at the same time, and I told the update section in Discord that, you know, keep an eye on the 1 to 3 minute time frames over here while price is moving down, because that will give you an indication of what is going to happen. And this is then on the 50-minute what I was looking for, right? You had the bearish CVD here, lower high on price, higher high on yellow. And if I switch to the 30-minute, then you can see higher low on price, but a lower low on the blue line over here with this little pivot. But then, okay, keep an eye on the 1 to the 3 minute. And the moment I actually went to bed, it was neutral. That was at the moment price was over here. ranging. But then if we zoom in, that is actually a few minutes after I went to my nest. Over here, lower high on price, little higher high over here on yellow already between this pivot and this pivot. So a little bit bearish CVD divergence, but that wasn't the only one, because then as price started to range over here, you can see lower highs on price, higher high on the CVD. There you go, bearish CVD divergences, giving more strength to the bearish CVD and kind of invalidating almost this bullish CVD divergence, because it looks nice on the 30-minute, but then you want to see continuation on the lower time frames, and that is not what you got. So there was bearish pressure to the downside, price wigged the low and is now moving impulsively to the upside, where this is a first resistance area where we then have a naked point of control that is still untouched over here at that level at 29,550. We do have news this week. We have a news at 2:30 p.m. on Tuesday, so make sure you trade safe around these hours, as well as on Wednesday at 8 p.m. we have some news, so there might be some volatility at those moments. And if we then finally go to the probabilities of the different scenarios, then on the medium time frame, currently the highest probability Elliott Wave scenario is the bearish scenario, where we are looking for a wave C to the downside. On the lower time frame, it's currently the diagonal, which is then the micro as well at the same time. So currently on the low time frame as well as the micro, this is at the moment the highest probability scenario, where wave 1 is finished in a contracting diagonal, looking then for a wave 2 to the upside, where the invalidation is price now taking this high over here, and I'd be looking at the moment for eventually for potentially the high of a wave 2 at this target box over here at 29.7k. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.